The Canadian government just announced that they're creating a $25 billion sovereign wealth fund, and they would like for you to
A new
invest in it.
pillar of our plan, the Canada Strong Fund, Canada's first national sovereign wealth fund.
Which, depending upon your level of trust with the federal government and being able to handle large sums of money, might have landed very differently for many people. Now, I'm not here to tell you if this is a good idea or a bad idea. There are genuinely interesting things on this list, and we're going to go through all of them. But I am here to tell you that when Ottawa announces a $25 billion sovereign wealth fund, but can't quite explain where the money is coming from, that's worth examining closely.
This is not a sovereign wealth fund.
It doesn't seem to be a traditional sovereign fund.
Because here's the thing about big government announcements. They're almost always real. Their intentions are good. The vision is compelling. It's in the execution that things tend to start getting expensive. And expensive in this context means your wallet. A quick note before we jump in, I am not a financial advisor or a CPA. This video is for entertainment and educational purposes only, and this is not financial advice. I'm simply an accountant who asks uncomfortable questions. That's the job. A sovereign wealth fund is exactly what it sounds like, a government-run investment vehicle. Instead of spending its money on government programs, the government pools a pile of cash and invests it into infrastructure, global stocks, real estate, and so forth, with the goal of benefiting the country over time and future generations. Think of it like a company that had a great year. Instead of blowing all their profits on expenses, the smarter move is to invest it. Let it compound quietly in the background. Saudi Arabia, the UAE, China, Norway, all of them do this very thing. These funds manage trillions of dollars collectively, and when done well, the outcome is genuinely transformational. Norway's fund alone is worth over $2 trillion and represents only 1/4 of the government's annual spending.
And all that blue area that you see on this chart, that's compounding returns. That has been compounding since they started the fund in 1998, so it's performed extremely well.
Not bad for a country roughly the size of Alberta. Sorry, that's my kids in the background. However, the key phrase in that is when done well. That's what does all the heavy lifting. We'll come back to that. So what exactly is Canada's version?
Canada's plan, all of the fund, is meant to support Canadian projects.
Announced as part of the 2026 Spring Economic Update, the Canada Strong Fund is the federal government's first national sovereign wealth fund. $25 billion over 3 years, used to take equity stakes, actual ownership positions in major Canadian infrastructure and industrial projects. Equity, not a loan, not a grant. Ownership. The fund owns a piece of these projects and shares in the profits if they perform. That's actually a structurally better model than most of what Ottawa has put together. I'll give credit where it's due. And the headline feature, the one designed to get your attention, is that everyday Canadians will be able to invest into this fund directly. Carney presented it like a government bond, where your principal is protected and you share in the benefits if the projects succeed. He also hinted at a possible TFSA RRSP tax treatment. On paper, that's actually a compelling offer. Canadians owning a piece of economic prosperity and sharing in the profits. That's actually genuinely interesting. They're not just paying taxes and hoping for the best. However, the devil, as they say, is in the details, and these details are forthcoming. So my question, what I want to know is, what is all this money actually going to build? I think this is one of the most important questions that we should be asking. The government's Major Projects Office has returned 15 projects for the fast-tracked Federal Reserve, with 21 total nation-building projects in various stages. And this is not a list of pothole repairs and bridge touch-ups. This is substantial. LNG Canada Phase 2 in Kitimat, BC, one of the 2 largest LNG operations in the world when complete, with the potential to attract over $33 billion in private investment alongside it. The Darlington new nuclear project in Ontario, which would make Canada the first G7 country with an operational small modular reactor, powering 300,000 homes. Critical mineral mines for nickel in Timmins, graphite in Quebec, tungsten in New Brunswick. Materials that the entire clean energy supply chain runs on. A 60% expansion of the Port of Montreal, high-speed rail between Toronto and Quebec City, an Arctic economic corridor, wind energy in Atlantic Canada. All of this is actually a legitimate list, and if it gets built on time and within budget, this could be profound for Canada's future economic prosperity. The downstream effect could be felt for years to come. More skilled trade jobs, better energy exports that helps lower our tax base, and possibly a country that isn't so dependent on the United States and at its whim for whatever it chooses to do any given Tuesday morning. Hey, do me a favor, give me a like on this video, or a hype, perhaps, if you're getting something out of it. My one reservation for this is that how often do you hear that the Canadian government has all these big plans and, well, this is how it's supposed to go. But there's theory and then there's practical application. But I'm a pretty informed guy, and here's a question that I've had on my mind for some time, and I imagine you have too. When we have crumbling infrastructure, roads, bridges, all this need better supply logistics, but we have massive unemployment, why aren't those two problems solved at the same time? Unemployed Canadians, infrastructure that needs building. That's not a complicated question. However, the Canadian government has announced plans or intentions to hire between 80 to 100,000 Red Seal skilled tradespeople by 2030 to work on these projects. So it seems like someone there up in Ottawa finally acknowledged and realized the obvious. Whether this actually happens in this timeline is an entirely separate question. Is that if this succeeds, you and I benefit from more jobs, better physical footing, a stronger economy. If it doesn't work, you're still on the hook. The risk doesn't disappear when you don't invest. It just gets rerouted through your tax bill instead. Carney keeps referencing Norway, and simply who can blame him, because it's an outstanding example of what can go right. $2 trillion sovereign wealth fund, a quarter of government spending, like it's spectacular. However, I always worry a little bit when people only look at the top, the pinnacle of success, and say, oh, they did it, we can do it too. Kind of like me looking at, say, Jeff Bezos, even though we kind of look alike, saying, oh, he did it, I can do it too. I can be the next Amazon entrepreneur and have billions of dollars. There might be challenges that you're not anticipating. There are two key comparisons that keep getting left out about Norway's success from press releases. First, Norway's government holds a majority stake in its national oil company. When Norway sells oil, the majority of those profits flow directly to the state. That's how they built this surplus that funded the whole thing. Canada's oil, however, is almost entirely privately owned. Ottawa gets tax royalties and revenue, but nowhere near the full economic upside that Norway is able to capture. That's not a minor footnote. That's a structural foundation difference that the whole comparison rests upon.
I actually worked in oil and gas for a number of years, and I remember for the last 10, 15 years, we haven't seen as much resource production and investment into Canada as we did in previous decades. It's pretty much completely dried up. If you were to do a quick Google search and type in, has Canada's investment into its oil and gas and resource production and extraction grown or shrank over the last decade, Google will reveal that it's actually shrank significantly, with the major component being the lack of investment in oil and gas. So in my mind, it's a bit of a stretch when the Canadian government's saying, well, Norway's doing so well. Well, they're into oil and gas. Canada, over the last 10, 15 years, not so much. We haven't taken full advantage and utilized all of our resources.
Second, and this one generally surprised me, is that they choose to invest almost their entire funds outside of Norway on purpose. The logic is that if you're managing a fund worth trillions and you start channeling investments towards your country's own projects and companies, you start distorting the market, creating conflicts of interest, and begin making decisions based more on politics than on returns. Norway built a problem around that wall from day one. Canada's fund, however, invests exclusively inside of Canada. That's not automatically wrong. Using a fund for national strategic interests is what other countries choose to do, invest into themselves. But it does mean that Canada's Strong Fund isn't a sovereign fund in the traditional sense. It's more of a government-backed development fund, which is fine. Just be honest about what it is. Now, where is the $25 billion coming from? When reporters asked Carney directly, he just replied with the spring economic update would have good news. When Finance Minister Champagne was asked the same question, he didn't quite answer it directly, but mentioned that Canada's strong fiscal standing would allow borrowing at favorable rates. I kind of see where this is going. Kind of like when you ask one of your friends if this looks good on me, and they don't directly answer the question right away, or they give you anything but an honest, direct answer, you start to kind of infer what they're saying. If you want to support this channel, there's a link in the description below to my Patreon account where you get a lot of great benefits. Be sure to check it out. So the end result is Ottawa speak for we're borrowing it. But we'd rather not lead with that. Here's the context that makes that matter. Canada ran consistent federal budget surpluses from 1997 through to 2008, over a decade of genuine fiscal discipline. Then 2008 hit, deficits started, and we've been in a deficit almost every year since. Canada's federal debt now sits at over 1.2 trillion, a debt to GDP ratio of about 41% and climbing. And the plan is to add 25 billion to that to fund an investment vehicle.
Norway continually has an annual budget surplus, whereas Canada is continually compounding and having debt.
Now, the question is borrowing to invest always a bad call? No, not necessarily. If the return on the investment exceeds the amount of debt that would accumulate from borrowing that money. Canada's 10-year Treasury yield is sitting around 3.5%. Sovereign wealth funds globally have averaged between 6 to 7%, depending on what fund exactly you're looking at, and exactly what the fund is investing in. So there's potentially a spread. On paper, this could be attainable, but infrastructure projects have a habit of not coming in either on time, on budget, or in a manner that's presented in some nice laid out spreadsheet. And that margin between the 3.5% borrowing costs and the anticipated, hopefully expected 6 to 7% annual return doesn't leave a lot of wiggle room for mishaps, unanticipated cost overruns, and just messiness, which we know Canada has had a bit of that in the last decade.
In fact, this Prime Minister has given Canada the worst food inflation in the G7, the worst household debt in the G7, the worst housing costs in the G7, the second highest unemployment in the G7.
This is one of the most important parts, I feel, and something that's usually just glossed over. In 2018, the federal government bought the Trans Mountain pipeline system and its expansion for $4.5 billion from Kinder Morgan to save a project the private sector was about to walk away from. Kinder Morgan had originally estimated the expansion at $5.4 billion. By the time it opened in May 2024, the total cost had reached $34 billion, more than 6 times the original estimate. And I want to be precise here, that's not a cost overrun, that's a different project. In case you're new to my channel, I'm Aaron, a 20-year corporate accountant and analyst living in Western Canada. I talk about personal finance, investing, and offer money tools. If this sounds like something you'd be interested in, consider subscribing to my channel. The Canada Infrastructure Bank, created in 2017 with essentially the same mandate as the Canada Strong Fund, catalyzed private investment in Canadian infrastructure. By 2022, the House of Commons Standing Committee on Transportation recommended it be abolished for failure to meet expectations. It's since become more active, but here we are again, building a second, larger version with borrowed money. The natural question, what's going to be different this time, deserves a real answer, not a press release. Here's what sits heaviest with me through all of this. Carney said Canada will become an energy superpower. He talked about pipelines, LNG, mines, trade corridors. He said all the right things. And I mean that sincerely. The direction is correct. There is a mortgage specialist that I follow, a mortgage broker, Ron Butler, that I really respect, and I align with a lot of his way of thinking and his principles. And he said the same thing, that we just want action to be taken. I'm paraphrasing what he said, but that many Canadians hopefully feel like I do, that we just want enough talk. Let's get this thing going. That if we had done all the things that we're talking about 4 or 5 years ago, we'd be in a much better position. And many Canadians, I feel, are tired of hearing about how far behind we are in the G7, that we're coming in last year, that we're falling behind, we have unemployment, nothing's happening. But it all seems like talk from Ottawa a lot of the time. We actually want actionable steps to be taken. Enough talk. A goal without a timeline isn't a plan. It's a wish. Some things have moved, yes. But in the window of opportunity and the scale of opportunity that Canada has right now, slow has a price in that we really have to start kicking things into gear to see results. If the regulatory environment doesn't actually change, if projects still take years to approve, if federal and provincial governments still can't align, then the Canada Strong Fund's returns fall apart regardless of how well it's structured. The fund earns money only if things actually get built. And that only happens if the government actually delivers something it has promised repeatedly and executed on halfway at best. Is this new sovereign wealth fund a great opportunity for Canadians, or is it an investment that could completely fall flat? Honestly, both outcomes are possible, but the real determining factor will be the execution. Not language, not talk, the execution of this strategy.
Now, I hope that this Canada Strong Fund succeeds and that Carney is able to keep his promises and propel the country forward, right? Like, I think most Canadians want that, right? Want for Canada to succeed and grow strong again. But my reservation is because, well, when Justin Trudeau was Prime Minister, there were all these big promises made about how housing is going to be revamped and we're going to build all these homes in record pace. And, well, we all know how that turned out. However, this is a new Prime Minister, it's a new day, so hopefully he's able, Carney, to keep his promises to the Canadians.
Now, as with any retail investment product, before I put one single dollar into any investment, these are things that I would want to check. Now, to be clear, I am not telling you in any way what to do with your money. This is what someone like me with an accounting corporate brain would just wonder about and want to know before I make a decision like this. How long will your money be locked up for? Infrastructure projects usually don't have a short timeline, so there would be holding periods. If you need the money in the next 5 years, that answer matters more than anything. How much of your life is already tied to Canada? Your home, your pension, your job? How much Canadian exposure do you actually have already? Adding more to a Canada-only portfolio and making the concentration top-heavy is something worth thinking about carefully. It's like an employee putting all their retirement savings, everything, into the company that they work for's stocks. It's great when it works, it's painful when it doesn't. What does capital protection actually mean? Carney floated the idea of principal protection, like a bond with upside potential. If that's real and properly structured, that changes the risk profile significantly. But until the fine print exists, don't make decisions based on a concept. And finally, honestly ask yourself why you want to invest. Do these numbers and the premise genuinely work for you? Or is it national pride or FOMO, fear of missing out? Both are human, but only one is a strategy. So here's where I land on this. The Canada Strong Fund is a better proposal than most of what Ottawa usually presents.
So when I choose to invest, I'm a little bit skeptical, as I hope you are too. I don't just trust what my friends say or my neighbors or whoever, my family. I do my own research and go with my instincts. And right now I'm kind of undecided on whether I should invest or not. I think I'll just sit on the sidelines for now and kind of wait and see how things unfold. What are they going to be building? Is it going to be bridges, roads, new areas? Are they going to be developing our resources? What is the time frame that the government's planning to unroll this sovereign wealth fund, the Canada Strong Fund? And so only time will tell how this will pan out, but hopefully this does work for Canada.
The projects are real. The equity model is smarter than the usual grant loan approach. And the concept of Canadians actually owning a piece of Canada's economic growth, if that's actually what's going to come to fruition, is worth taking seriously, or at least possibly considering. But then again, we've also watched $4.5 billion projects later become $34 billion projects. We've watched a wealth fund get drained quietly by provincial governments that need cash. We've watched an infrastructure bank that was supposed to be eliminated and dissolved be brought back with a bigger budget. And finally, Canadians have quietly watched from the sidelines while there's big talk by the government about Canada becoming the next energy superpower of the world without a single contract signed to match it. None of this is necessarily a bad idea. It's an idea that requires proof. Real shovels in the grounds, real commitments, not just headlines and talk. Watch for the fine print on this when it comes out. Ask questions and don't let the flag at the top of the press release make your decision and do the math for you. Again, I'm Aaron, a 20-year corporate accountant living in Western Canada. I talk about personal finance, investing, money tools, and I try to represent the voice of the middle class and tell about the mistakes that I've made in the past, so hopefully you don't make the same ones. If all this sounds like something you'd be interested in, consider subscribing to my channel. And here are 2 great videos recommended by the YouTube algorithm that I think you'll really enjoy.